be able to access. So let's go ahead and begin. First thing I just want to cover real quick are the introductions and agenda. Again, I'm here with you. I'm from Afribiz. I'm the Executive Director of the Afribiz Foundation and also the CEO of Afribiz Group. Dean Bagwell, he again is with Global Trade Insurance. Dean, would you just unmute yourself just for a moment just to say hello?
Good morning. Can you hear me?
Dean, can you repeat? I can't hear you, Dean. Just wanted to double check.
Let's try it again. Is that better?
Oh, that's perfect. Thank you. See, this is our sound check between presenters. Okay, so I'm going to go ahead and, Dean, if you'll mute yourself again, we'll go ahead and I'll go through the agenda just real quickly, and then I'll begin my part of the presentation. Basically, what we're going to do is there's basically when we're talking about payment options, this really applies to any global region, this particular presentation. But before that, I wanted to give you some background and context for Africa, and that also includes our interventions in Africa as Afribiz. So I'll give you an overview of Afribiz, an African buyer profile, and also just discuss a few of the programs that we have concerning African buyers. And then Dean will actually take over and talk about payment options. My section will be like 10, 15 minutes. It won't be too long so that we can get to the heart of the content. So let's just talk about first about Afribiz. Oh, I have a lot of extra slides in there. Okay, so basically Afribiz, we do have several different companies, but the two primary ones that are engaging and leading a lot of our initiatives is the Afribiz Foundation and the Afribiz Group. Won't go into a lot of detail here, but basically the key difference between the two is that Afribiz Foundation is looking at developing large-scale interventions to increase economic development, particularly inclusive economic development in Africa through the private sector. So basically we look at how to leverage things that are being done or creating things that can make an impact to a much greater extent in Africa. And when I talk about some of the programs, it'll become evident what I mean by that. But what that does, though, however, is it now creates opportunities for companies who want to do business in Africa. And because I'm from the United States, we're doing quite a bit with the U.S., although we also work with other countries like Spain and China. And basically, then the Afribiz Group portion, which is our for-profit side, will then work with companies who want to go into the continent and service them or plug them into things that we already have going. So what are the key things that we're doing? First, we develop strategic projects handling the early stage project development. I'll talk a little bit more about this in a moment. Developing partnerships to open long-term sustainable business opportunities. So these are the things that we are actually doing to do what we said we were doing on the first page, the economic development and also the business development. We're also developing capital investment raising structures for Africa, whether it's from just doing trade finance, creating more funding opportunities for African buyers so that then they can buy more product to increase their productivity in business. We're also plugging technical partners, companies, and investors to projects under development in Africa. And then we're connecting exporters with qualified African buyers. And these are just some of the examples of what we're doing. On this page, this just kind of puts it all together, the different things that we focus on. You can go to our website and, get more detail on what all of this means, but this gives you one picture of all of the different pieces that we're trying to pull together. And one of the things that we know in doing global business is that relationship, face-to-face, physical interaction is still extremely important in emerging and developing markets. So we are not just resident in the United States. In fact, our main operations center is actually in Johannesburg, South Africa. And then we have regional offices in these different places, both inside of Africa and outside of Africa, to connect all of the dots. And then we have, depending on projects that we have, then we have affiliates in other African countries and other countries external. Okay, so now let's just take a brief look at the African buyer. Just in general, there's 1.14 billion people on the continent. Over 60% are under the age of 35. It's one of the fastest growing middle classes. It's close to 60% of the people live in rural areas. And in Africa, transactions tend to be more informal than formal. That simply means that, you may have companies who actually make a lot of money who are not actually registered. They deal in cash. And so for a foreign buyer who wants to, or US buyer who wants to engage with these people, unless these people connect you, or a second thing that they do is relatives or friends that live in the United States, they'll tell them, will you please purchase this for me and have it sent to Africa? So those types of channels basically are very informal. And so it's not like you can really directly market to these folks. That's why, for example, being on the web is very important, because they will search the web. They will also check again with their channels. So sometimes it can be very advantageous for you to be in networks that are in your community or in your region that focus on the African diaspora to share about what you do. Because typically, again, you are not going to get them in a formal business environment. Now, when we talk about these people having money, I mean, these people can be multimillionaires. Their companies can be worth $5 to $10 million transacting every year, but you would never know it because they don't have the profiles, the professional looking external environment, but yet they make a lot of money. Now, let me tell you this story, and it actually relates to a lot of the points that I'm making. Standard Bank is the largest bank in Africa by assets or transactions. And so they did a study, and they service a lot of these small and medium-sized companies in Africa. And the interesting thing that they found, and again, remember now, they didn't know this. I mean, these were banks in Africa that hadn't really quite gotten or understood the market. Now, there have been banks and financial institutions that have understood this, and now larger banks, more what I would call formal structures, global banks, are now trying to follow their model to find, new markets and new customers. So one of the case studies they did was this woman. She bought every month she bought a container of auto parts and brought them. I think it's Nigeria, okay. And this woman was dealing in cash, had never done banking services. When they brought her on as a client, they found out that she was depositing on average $5,000 a day. And when you translate that, that's almost $2 million. So there are actually a lot of these people who exist on the continent. They basically are very comfortable. They're, what we would call wealthy. They're not in debt. They have cash to pay. And so as opposed to an American market that's very saturated with a lot of competition, where everywhere you go, you see advertising and all these things, people and businesses being overburdened in terms of debt, you've got an environment where it's almost virgin territory. So imagine now being able to offer different payment options other than cash for someone who has annual revenues in excess of $500,000, and they've been dealing on cash. And so these are the audiences that I'm trying to promote U.S. exporters getting involved with, because essentially they are good business risk, if you want to call it. They are not formal. They have not, done all the paperwork or whatever, but those are things that I'll talk about later that we're working on so that we can connect them both to being qualified buyers, for credit, as well as then connecting them to exporters. So that's a very good example and a very typical scenario. There are, of course, those who are traders that are on the lower end. They may have a lot of cash but don't have a lot of profit. And so those are not really, there are opportunities there. They also deal in cash and stuff. But we're looking at the ones that we know are really growing businesses that have cash, but just need to have, structures put in place to help them access credit and access more export opportunities, in my case, particularly from the US. The other thing is that in this environment, there's sophisticated but simple mobile banking finance solutions coming online. Some of you may have heard of M-Pesa. M-Pesa is actually a world-class payment system that was established in Kenya maybe about 5 years ago. And essentially what it did is all of a sudden, cash started moving in society more easily and readily through, electronic payments. And, it's interesting, even amongst the poor, the government didn't know how much cash was actually being transacted. And through M-Pesa, they found that there was a lot of transactions that were going on because now it's very, you have the history and the records. So what we're finding is that mobile payment solution, in fact, in the United States, I think it was one of I can't remember which agency, but they're looking at how to bring M-Pesa to the United States to bank unbanked people, people in rural areas where they really don't have any service. So this is a phenomenon that's happened in Africa, and it's actually leapfrogging, and it's the leader, the pioneer in the global space of mobile payment transactions, and also actually even cell phones. So you've got a society that seems to be somewhat backward, in terms of sophistication, but yet they're leapfrogging in areas that impact business. Okay, another thing about the African profile, I indicated that 60% of people live in the rural areas, but obviously most of you will probably first engage with those who are in cities, and those tend to be individuals or companies that are more upwardly mobile. Now, exceptions are like maybe oil and gas, where they're in the oil fields, and maybe agriculture, and so you may have larger companies that operating in rural areas, employ a lot of people, and so therefore, obviously those are good target markets as well. But basically, we have megacities, those that are over 10 million. There's Cairo in Egypt, there's Johannesburg in South Africa, Lagos in Nigeria, and Kinshasa in the Democratic Republic of Congo. They're large cities like Nairobi in Kenya, Accra in Ghana, Addis Ababa in Ethiopia, and they tend, I didn't really check the numbers, but they tend to be more than like 3 million. And then you still have over 100 cities with more than 750,000 people. And I want to, all of those are great opportunities, but I really want to talk about those just real briefly that are over 750,000, even those that are even over 500,000, because these are cities, they're called second or third tier cities. I don't always remember my classifications, but these are cities that are growing very fast because they're kind of in the nexus of traffic between major cities, or, maybe a company moved there and an industry is starting to burgeon. And I'll give you an example. Eldoret, Kenya, it has an international airport. Maybe 6-7 years ago, it was about 50,000 people, and now it's getting close to 500,000. Now, in a city like that that's growing that fast, you can imagine that they don't have a lot of things. They don't have proper infrastructure. They have need of everything. And so again, you get businesses that are starting to move there. For example, now real estate, it was really cheap there, but there was a US nonprofit that moved in, built a nice area. They built orphanages and a lodge and different things. And so, everyone, the property developers are starting to move in, the business people are starting to move in. So there's a lot of money that's starting to flow. So these are also really great places to find customers because they need everything. Now, granted, Africa, we say in general, needs everything, but these areas really need everything. And again, there's a lot of cash that's flowing. You have business people that if they want to build a building, they can just pay cash for it. Okay, and I'm not saying that's, thousands, hundreds of thousands or whatever, but that's their mentality. They're used to doing that. As they become more sophisticated, they then begin to look at how to develop property, and then, look at how to finance it and all of those things. So, we still have, we have a very upwardly mobile population, particularly in sub-Saharan Africa, and essentially they're still primarily cash-based. However, because people have figured out that it's an upwardly mobile society, there are now banks, financial institutions, investment banks that are coming in to provide, those different types of sources, and of course to develop innovative products that are related to Africa. As these things begin to develop, then that will, of course, then create, again, more opportunities for exporters who want to get into the markets, because now these companies will have options in terms of, purchasing. Now, one of the things I will say, however, is that even when there is financing, their financing is not like in the U.S. It's very collateral based. So even if they have, quote unquote, a good credit profile, their bank still wants collateral, and the interest in which they that they have to pay is quite extreme compared to what we pay. And so, as Dean begins to share and talk about different things, you will begin to see some of the advantages that the options that he's going to talk about and the opportunities can create for you, in addition to just selling a product. And the last thing that I just wanted to point out is that much of Africa's products are imported. So even informal businesses still purchase from foreign buyers. They still purchase from people who either come there, that are from, another country, or, they're purchasing stuff outside of their country and having it imported. So they do know the process, but they understand the cash process. They are, like I said, there's logistics companies that work with them. So, basically, many African business people who've been in business for a while, they're not necessarily extremely well educated, but they're very good common sense, and they know how to make money. And those are the people that you want to have as customers, because you can teach them, better ways of doing things, but you want people who know how to make money and how to do profit. And Africans, Nigeria, Kenya, they're very good at doing that. Okay, so now what does this mean then, as far as what Afribiz does? Just real quickly, project development. We basically are focusing on 3 different areas. We don't help every type of export or every type of company. We are very targeted at those things that will help catalyze the African economy, creating a lot of opportunities for African businesses and people, but also the same for like U.S. companies. If we can do things on a larger scale, then it creates more opportunity for everyone. So right now we're working with large-scale projects, energy, infrastructure, manufacturing, and agriculture, that as they develop, they will need services of companies to do things like build a power plant, provide products, solar panels, all sorts of different things. And so basically on that, U.S. companies we bring in as technical partners, either as co-developers or exclusively exporters of their product or their service. We also look at subsidiary or licensing setups where, for example, you might have a technology or a product or a franchise and you want to go into Africa. We don't do reseller, distributor, or agent models. We're not we basically are full ventures. We're not a sales channel is what I'm trying to say. We're very holistic. We do the whole business. So, for example, you might, in order to sell in Africa, African countries are trying to promote localization of manufacturing. It doesn't mean that every company has to do that or that's the best option, but that's one example. So, for example, if you have a part that can be used across Africa, you can set up in certain places like South Africa. You can get incentives. You can get assistance with training local people to do the work. And basically then now you have local presence on the continent, and that in itself opens up a lot of doors for you. The other thing is the trade finance program, which probably will apply more to the group today. That is basically where I mentioned before, there are a lot of African buyers that make a lot of money. They're based on cash, and but they're hard to find. They're informal. I've spoken to, I know, several that we're working with now, started working on, they say, well, 2 or 3 times a year, I spend $5 million buying dredging equipment. Okay. I mean, that's a lot of money. So, and they said, and I would buy more if I could buy it over time. So that's the key message. That's why the trade finance program, we identify and then we prepare those African buyers for finance. Typically, it's not, they typically have their bank records and all of that in order, because if they're doing that volume, they're typically banking, and they have to be a formal company. And in most of the countries, whereas we don't have to have audited financials, most companies, it's not like here where you're just like a public company, or a private company that chooses to do it. There, in most of those countries, you're supposed to have audited financials. So they basically have the basics of what it would take in order to get credit. But the issue is that they've never done that outside of their country, and so they don't understand, and they don't even really know what's available. So what we do is we go in once we identify them, and we help them with that process. We actually help them develop a credit profile, and places like CoFace and others will, go out and confirm, like with their banks, that this is their transactions and all of that. So then now that they're listed, and then that means that, if you want to go to EXIM or any of these others, there's a credit profile. And so that then creates critical mass. So for you as an exporter, instead of dealing with one or whatever, once we get through a couple hundred, for example, there's many different companies that might be able to use services. And we actually intend to do quite a lot of this, but this is just an example. So these are the programs that I think are most applicable to the conversation today. What I'm going to do now is I'm going to hand this over to Dean. Dean, if you would unmute yourself, I'm going to hand over to you, and I will be muting myself.
Okay. Everybody hear me okay?
Dean?
Yep.
Hey, Dean, just want to let you know, yes, we can hear you.
Right, and you're going to move my presentation. And good morning, I'm Dean Bagwell. I'm actually a specialty broker where I deal strictly with credit insurance from private markets as well as our local EXIM bank government programs. And just basically you want to review the most common methods of payment, that exporters experience. We're going to talk about how credit insurance can help your business grow safely, avoiding the risk of non-payments. The most common methods of payments for exporters are the lowest risk, starting from the lowest risk, are cash in advance, letters of credit, documentary collections, and open accounts. Successful businesses actually use all of these to succeed in a global market. Cash in advance, you have the payments before shipments are made. That eliminates the risk of non-payment. The risk is actually placed on your buyer. The buyer actually has to trust that you're going to provide the products that you've agreed to. And the cons is you may actually lose a customer to a competitor over payment terms. There will be no additional earnings through financing operations. Most companies are willing to pay additional costs for credit terms. And moving forward, in letters of credit, payments after shipments are made, a variety of payment and financing risk mitigation options. The risk is evenly spread between you and your customer, provided all the terms and conditions are met. Now, on the letters of credit, the process it's complex and it's labor intensive, and it's expensive. Letter of credit can generally is going to cost you a minimum of 2 to 3%, more likely probably 5 to 6%. And if you're buying from a manufacturer, and they only deal in letters of credit, you can actually take it upon yourself to maybe suggest other alternatives for payment options, such as credit insurance, which cost is a lot less. Moving on to documentary collections. Payments against payment or acceptance. The pro is you do have some banking assistance in obtaining payment. The process is simple, fast, and less costly than letter of credit, the risk you are exposed to more risk because the terms are more convenient for the documentary collection compared to the letter of credit. The cons, the bankroll is limited, and they do not actually guarantee payment. Banks do not verify the accuracy of the documents. You actually have you do have a risk available that's out there where your merchandise could be, shipped to a port and they don't pick it up, or they try to haggle a new price, and you're either stuck selling your product maybe somebody you don't know, or having to reduce the price to satisfy rather than bringing it back in the United States. On open account terms, you boost your competitiveness in a global market, establish and maintain a successful trade relationship. Very important in the global market, especially in Africa. The risk, you're going to face a significant risk, as the buyer could default on a payment obligation after shipments of goods. Cons, there are additional costs that are going to be involved with risk mitigation and billing measures. Extending credit is a fact of life. Most companies, in order to compete in a competitive market, extend credit terms to their customers at the risk of not getting paid. Sound credit management practices are necessary to ensure your cash flow and profitability. You have the credit investigation before the sale, your credit application, checking references, bank account information, monitoring the health of your accounts. A lot of companies, once they offer credit terms, they don't follow up and continue checking references and information. Swift action at the signs of financial stress. Are you the last person who knows that your customer is going to default? Even the best credit controls sometimes are just not enough. Companies file bankruptcy every day. Credit insurance can help. I think I'm out of order, but that's all right. The potential impact of a credit loss. If you have a $100,000 credit loss and your margins are 10%, it's going to take $1 million in new sales to offset that loss. And to go out there and increase your sales, find a new sales to offset that's not as easy as it sounds. Credit insurance can help. Credit insurance is insuring your accounts receivables against insolvencies and other forms of protracted defaults, the slow pays and the no pays. A credit insurance policy allows policyholders to extend credit terms with confidence, knowing the credit insurance company is going to research your customer and going to deliver a detailed credit analysis. They're going to monitor your customer's financial health. They will notify you your customer's financial condition changes. They'll reimburse you when a customer is insolvent or unable to pay an outstanding balance. All in all, credit insurance is going to reduce the risk of you extending open credit terms. Now, how credit insurance works, the policyholder submits a request to the credit insurance company for approval. Upon approval, and goods and services are sold to the buyer, invoices are sent and paid. The credit insurance provider is monitoring your buyer's financial health. If they see that there's been a change in the financial condition of your client, they will notify the policyholder. In the event of the invoice shipment process is halted, claims are paid. The outstanding invoices. Credit insurance can play a significant role for your company to safeguard one of your largest assets. Credit insurance protects against a devastating loss to an unprotected asset, your accounts receivables. Most every business out there carries fire insurance, and you're more likely to have a credit loss than a fire loss. Credit insurance allows you to support your sales goals, expand into new unfamiliar markets much more comfortably, knowing that you're going to get paid. Generate more sales by extending larger lines of credit than you might normally offer, knowing that payment's guaranteed. Become more competitive to letters of credit by offering open account terms. Again, letters of credit are expensive. Companies are willing to pay for open account terms. Strengthen your credit risk management control, especially for small businesses. And having a credit insurance policy actually acts as kind of your credit department, where the underwriters are going to perform the detailed credit analysis, and they're going to lower your credit investigation costs. They will generally pull the credit bureaus and do all the work for you. It allows you to cap a bad exposure, bad debt losses. You know what that's going to be every year. Credit insurance has borrowing benefits. Increased collateral base and borrowing base. Credit insurance provides security against non-payment and is recognized by most banks as security for receivables included in your borrowing base. Banks are willing to give better deals if they're writing a secured loan. And by including your bank in your policy, if you experience a loss, the checks they're made out to you as well as the bank, securing their interest. Now, the types of credit insurance. The main players are the Eulers, the Copas, the Tradius, AIG, to name a few. They insured actually domestic as well as export accounts. You can cover political risk, single buyer coverage, terms available up to 180 days. They have no restrictions for the U.S. product sales. The militaries are okay. The minimum payments start out about 10 grand, and they go up from there, and they're based on sales, your experience, your risk, and they require deductibles and or co-insurance. You have the EXIM Bank insurance. You have U.S. content required at 50%. Does not support sales to the military. It's backed by the full faith and credit of the United States government. There are no minimum premiums. You pay as you go. They offer single buyer coverage as well. Medium-term coverage for payment terms beyond 1 year. They insure loans to foreign buyers who are buying American-made products. They will also insure letters of credit to foreign buyers who are buying American-made products. A couple of the programs I want to talk about. The small businesses, Express Insurance is a great way to start. It's a multi-buyer policy for small exporters who are doing less than $7.5 million in export sales annually. It covers 95% political risk as well as commercial risk. And the cost is 65 cents per 100 on 60-day terms. And EXIM Bank does all the in-house work. They pull the credit bureaus. They do the underwriting. And it allows up to 20 foreign buyers, can't be insured. Now, if you're doing more business than that, exporting, they do have the small business multi-buyer program. Again, this, covers 95% of the political risk as well as commercial risk. You're required to actually pull the credit bureaus. It does allow for discretionary credit limits. And the cost is a little bit less, at 55 cents per $100. Credit insurance is one of the only insurances that actually is a profit center for you. Credit insurance, by allowing you to open up in new markets, increase your sales, as a profit center to you, and it can also save your customer money. Your customer, if you're doing business with letters of credit or you're tying up their cash flow, by being able to offer credit insurance allows them to maybe buy more products from you. And again, my name is Dean Bagwell, and I appreciate your time today.
Great. Okay, so Dean, I'm actually going to open it up for questions. So if you have a question, just type it into the chat, and then we'll respond. But I did want to make some comments to give, again, to contextualize Africa for the audience. First of all, now remember I indicated that most of the people deal in cash, and of course, if they could have credit, they would buy more. I also mentioned that that their banks in Africa tend to require collateral, and also even though someone could have done 100 transactions with them over $1 million, that's just the way the business model is. And because there's really not necessarily a lot of competition, they can continue to do that. Also, the interest rates tend to be higher. Maybe here, let's say, we think an 8% interest rate is typical. There, it's closer to, anywhere from 14, 15, 16 and up. So, so for buyers, when they can get, and Dean, you can probably comment more on this, but basically they're going to get a lot lower interest rate, even with having to offset the cost of getting the credit insurance. You're going to be able to offer them much more favorable terms than they can get in Africa. Dean, do you have any comments on that?
Yeah, that actually is correct. EXIM Bank, now I am not involved on the financing side with the EXIM Bank, but they have programs. Dan Holt.
Yes. Mm-hmm. He's our local, in Charlotte. Mm-hmm.
He tells a story about a customer of his in Ghana that was actually selling digging equipment, mining equipment. And that guy, his customer actually is financed through EXIM Bank. Saved him a ton of money, where I think the interest rate would have probably been over 20%. He was able to finance that here in the United States with credit insurance, and it saved him a ton of money.
Yep.
If you are manufacturing goods here in the United States and selling to approved countries in Africa, they have those options where they can actually finance that product here through the EXIM Bank. And you're right, the interest rates are a lot cheaper. They're maybe more detailed, but it sounds like most people are are willing to willing to provide financial information.
Yeah.
Which is key to
Now your first time doing that, it just an experience. It takes time for them to gather that, because this is not, what I'm saying, again, it's a new paradigm. So that's why with Afribiz we're trying to work on, doing that process, helping them get all that stuff together, because it's just not something they do. I mean, they can have the information you need. And so basically we go through that process. You as an exporter, I mean, if you're going to make a lot of money on it, it's worth your while to be patient, and do this with them, because you'll end up making more money. But we're trying to, alleviate some of that. We can't do it 100% because obviously we're not going to service all exporters from the U.S. to Africa. But the idea is that there will be others who will be doing those types of things as well. So the issue is, it's not that they can't qualify. It's just that they don't necessarily know that it's available, and two, they're not necessarily sure how to prepare themselves for it. So that's why that's a huge gap that, again, we're looking at how to close that gap. So, what I'm saying is there are qualified buyers. It's just, and again, most people do cash, but wouldn't you like to be able to double your sales, because they're given more time to pay, than what you get. So, that's one thing. Another thing that I wanted to comment as it relates to with the U.S. programming. Much of this, what we've found is that depending on where you're at in the country, some banks will not necessarily like to do, even though it's EXIM guaranteed, they will shy away from Africa because they do not know about Africa. Okay. And so they just think it's full of danger and there's no, they have no concept. So for them, it's just, they think it's a very risky thing. So like if you're trying to go to the bank, and get, as Dean was talking about, trying to get a loan off of those receivables, maybe, right, Dean? That's what you're saying, because it's guaranteed. You may have difficulty. So if you run into those problems, then you should go back to Dean, and then ask, can you help me find a bank, or EXIM find a bank in the United States that will fund this transaction? And there are different options. It may not be that your local bank will do that, because we found we're located in Charlotte, and even though we have some of the largest banks in the country, I mean, it's still, Africa's still a very foreign thing to the Charlotte operations for these banks. So because they don't understand and they can't, even though it's an EXIM guarantee, they still, they hesitate. But what I will say is that one of the ways that you can assure yourself and assure the bank is that, when you look at the credit insurance, they say that they cover it 95%. Okay? In Africa now, because remember, they're used to paying cash, they will include a down payment. So if you need 10%, 15%, even 20% on that invoice, and then the rest is on an open account with a credit insurance, that's fine. That means that there's basically no risk in you not getting fully paid or the bank being fully paid, because the credit insurance is providing you one side, and then the cash deposit or upfront payment is providing you coverage on the other hand. And so I tell people that, banks still, depending on who you're dealing with and all of that, that still might not be enough for them, but there will be a bank that will do that. But this is something we tell people, is this is how you are sure that you're 100% covered on your transactions, by requiring it this way. And again, because they're used to paying cash for these deals, these transactions, a down payment, it's not a problem at all. Okay, so Dean, go ahead, Dean.
So on the EXIM bank finance programs, for foreign buyers, there is a down payment. They are required to for 15%.
Oh, they are. Okay, well, okay. So yes, so 15%, asking them for 15, 20%. Even like, so if EXIM is requiring 15% and you still want that other 5% covered, ask them for 20% or 25%. And to make sure that, right, so that you're not exposed. Sound good, Dean?
Sounds great.
Okay. So, and one of the things that's a little bit hard to track is, again, because there's of the informality. I'll just tell you, some of the sectors that you can look for, where there'll be a lot of activity with people who are, that have cash. The oil sector, there's a lot of local companies now that are, or infrastructure. It's not just, these large international or, the largest companies in the country. You start seeing all of these companies starting to pop up that are local. What's happened is, like, let's say, like Shell or ExxonMobil, when they hire people in the oil sector, they hire both people, foreign, from their own countries, and people locally. So a lot of these people who have been working in Shell or ExxonMobil, they are very experienced. They have corporate exposure, and so they become very savvy, and they see business opportunities, in their country, and then they start their own businesses. And so they are really quite capable of running business because they've been running the businesses for Shell and ExxonMobil. And so they start, and because of their connections, they start getting, very lucrative contracts or opportunities, and they start generating cash. And so you're dealing with a population that's not ignorant, that they could be well educated. It's just that they don't know about, credit insurance or, trade finance and some of those things. So they end up paying cash. So those are the targets, so when you look at like the oil sector, if you look at infrastructure, if you look at maybe like automobile, even on the retail side, anywhere where there's like franchising or there's large scale development or industry development, you're going to find pockets of these people who are involved. And so their businesses actually would not lean towards the informal. They would be more formal, but at the same time, just because they're not used to doing things with credit insurance, they don't know about it. And so if you were looking at really getting into Africa, going beyond getting a web interface, I recommend that people go, and you can work with the U.S. agencies like the U.S. Commercial Services. They have trade delegations. They have different things to begin to tap the market directly, because that's really where you're going to. I'm not saying that there aren't companies who aren't making money through the web, but typically it comes from a referral. It comes from a direct interaction with someone, and then the opportunities begin to open up. So, if you're looking at the cost perspective, again, go to the local, go to your local networks, even go to universities. I mean, there are a lot of African students, and people think African students are, poor because they have this perception of like Somalia and Kenya, not Kenya, but, some of the areas where they've been allowed into the United States because of refugee status. Most of the diaspora that has evolved in the United States, except for the last maybe 10 years, they were people who were came over. Most of them, their families had money, and wanted them to have a good education. A lot of people came, like as the middle classes, became better off than they came. It's only been the more recent history where we've had, more Africans coming that are refugee status. So there's a whole slew of, people who are well connected back home. In North Carolina alone, it's one of the largest African diaspora populations on the East Coast. And nobody would think of that, but it's because of our universities. It's because of our large companies like Bank of America. African diaspora are all throughout those institutions in healthcare. And, you can just ask them, well, I have this business. I know it sounds odd, but you ask them, I have this business. Do you have any connections back home? And I know it sounds strange, but many of them may, have connections with very significant business people and also, government. And it's through those relationships that you get access to information and markets that you may not have had. So you don't necessarily have to start off by going to Africa, but do research locally and talk to people who are from Africa, and see if there are channels that you can create for yourself. So you're just not going through the formal things. It's great when we have the U.S. delegations coming here. It's great, when all these things happen, but a lot of business gets done in Africa through relationship. Okay, Dean, do you have any other closing comments?
I do. Actually, wanted to chime in, and as far as if you're looking for assistance, if you're here in the States and you're looking to go to countries in Africa, the best resources here in North Carolina. Now, these are actually all over. They're all over the states. Mm-hmm. They do such a. I'm familiar with the North and South Carolina as you are. Is the Export Assistance Center. Mm-hmm. Here locally, you got Mr. Sizemore, and your local universities here. You got the SBDC centers. Mary Romano does a great job, and she's located in the university area. Those people actually can tell your people about the Gold Key programs, which is a great program. Just kind of give you a little bit, now they know more about it than I do, But basically, if you have a business idea or a business plan, give it to them. Say, hey, you know what? I'm thinking about going over to Nigeria. They will actually do the legwork for you. Find out, what kind of potential sales your product will have in Nigeria. They will work with you. They will actually set appointments with people that are buying your product. And will sponsor you for a trip to Nigeria to meet with those people. Because business is best done, face to face. And that's just one program. They've got other programs that will, put you in maybe a local trade show. They work hand in hand with the State Department. And there are just many programs that are out there willing to assist you. A phone call to the US Export Centers or the SBDTC is an easy way to start that.
Yep. And I also have, I also have a one-page flowchart that talks about these resources and, kind of when you engage with them and list them. And it's on the website. And I'll send it out to the participants as well. If you're not in the Charlotte, North Carolina area, the flowchart still gives you an idea of where you should look, what types of organizations you should try to connect with in order to find out, how to make connections with markets in Africa and other places. So it's still a useful tool for you because it kind of educates you and looks at what the local ecosystem might be in terms of connecting you to foreign markets. So it looks like we don't have any questions. So what I'm going to do is I'm going to go ahead and have us sign off. I'll give you one more chance to ask a question. If you don't have a question now, but you have one later, feel free to contact Dean. And again, you can download the slides you should see in the chat window that I've listed the link for you to download. So you can contact Dean at his information here on anything that was in the presentation that he did. And then for me, you can contact our office in the United States at this number, and someone can assist you. We also have websites, afribiz.org and afribizgroup.com. There's actually another website that we have that's information on all 54 countries in Africa to give you just some background about the economics and different things. So that's afribiz.info. And those three, typically you're going to find a lot of resources just from those channels. And of course, also, as Dean mentioned, our U.S. agencies have also resources. And if you go to export.gov, you will find a link that will provide you information. They actually have what we call country commercial guides, which gives you an idea of the different types of U.S. products that would sell in that country. It gives you access to key contacts and how to do business in that country. And you can access all of that information from export.gov. So again, I just want to thank you for joining us today for leveraging payment options to attract African buyers. And we are going to sign off.
Thank you, Lori.
Thank you.